it's not a good year as an MSTR shareholder because you lost you lost money because the share went down. But I think it will have been a good year in retrospect if you look back in a few years and see how much Bitcoin they were able to accumulate. Because I think you need to have the long-term vision of this company in mind, and the more Bitcoin they're able to accumulate, the better off they will be at the end.
I would argue that as a shareholder, from a Bitcoin lens, you're fine. From a fiat lens, you're not.
How many chairs are you sitting on right now?
Hello, everyone, and welcome to One Chair. None of what you will hear is financial advice, and this podcast is for entertainment and educational purposes only. So today we have breaking news from Strategy. They just announced that they created a USD reserve next to their Bitcoin reserve, and also a small Bitcoin buy next to it. So Strategy was it. So they were able to raise 1,478,000,000 by the issuance of common stock in the last 2 weeks. They used a very small portion of it to buy Bitcoin, to round them up to 650,000 Bitcoin overall, and the rest they put into this USD reserve. So which it means that they are now sitting on 1.4 billion of cash next to their Bitcoin holding. And the plan with this cash is to have this as a buffer to be able to pay the dividends on all of their preferred shares. And with the reserve they've built so far, it would be 21 months worth of dividend that they would be able to cover with this raise that took them 7 trading days, basically. So big news here on the MSTR's front. What are your thoughts on that?
Yeah, I think that's huge news. Yeah, you can see that it probably came from various angles because there's been a lot of talk about how is Strategy able to come up with dividends. They also called it a Ponzi scheme because of how they fund the dividends. And I think all of these narratives are kind of thrown out of the window with this cash reserve. Additionally, what I found really interesting in their presentation was how they mentioned that with this cash reserve now they're improving their credit worthiness. That led me to go back to the credit rating that they got from S&P about 1 month ago. They're rated B minus. Here in one of in their rating, it was mentioned that one of the issues with Strategy was that they had low US dollar liquidity. So I don't expect that there will be an improvement of the credit rating tomorrow or anytime soon, but they're building on this foundation to actually improve it, right? So next time that they get rated, probably in about 11 months' time, and hopefully also if they reduce the amount of the convertibles, because we also saw that this was an issue for their credit rating, right? So these two components should allow them to have a higher credit rating. And I think that's very, very interesting news because suddenly you can see that they're really looking to improve this in the long run. So yeah, really bullish news in my opinion.
Yeah, that's a nice angle, and I hadn't thought of that one. And it looks like they're just killing two birds with one stone here. On one end, playing the long game with the credit rating agencies. They're really implementing what the criticism of the rating agencies was so far, right? By increasing their cash reserves, and we already know that they want to move away from the convertible bonds in the long term. So sooner or later, they will get higher ratings just by implementing those actions. And on the other hand, you have a lot more security for the market participants buying the preferred equity, that they really will pay out those dividends now, because they have this cash reserve that is set aside just for that purpose. And again, they were able to raise 2 years worth of dividend payments within 1.5 weeks here. So this really shows that they're serious about their commitment to the holders of those preferred shares, and this should also, at the same time, then long term increase the demand for those preferred shares. which is good to see. And I think it also de-risks strategy in a deep bear market or Bitcoin winter, right? Because we mentioned that in the past that this whole Bitcoin Treasury playbook or levered Bitcoin Treasury playbook is reflexive to the upside. If everything goes up, it gives the flywheel is in full motion, and it gives unlimited opportunities to raise money and buy more Bitcoin. But to the downside, it's the opposite effect, right? And I think we could have had a situation, or one risk of this playbook was that at some point it might have gotten very difficult to raise money. And it's when you need it most, right? That it will be the most difficult if we're in the depth of a bear market. Everybody thinks Bitcoin's going to zero. MSTR is very depressed, and then we're below 1 MNAV, and there's no demand on the preferreds. And in such a scenario, it's good to be sitting on cash to be able to pay the dividends, and that's what they reacted to now. And one more thought is that I'm really impressed by Strive and their strategy, because they had the foresight to implement this from day one, right? So they're actually in some aspects on their strategy now, they're ahead of strategy, because this is something that with SETA they have implemented. So with the raise of SETA, they also put aside cash to cover the dividend payments of this preferred from day one.
That's a very good point. So they were ahead of the curve on this one, or at least ahead of strategy, which is nice to see that now there's other companies, the Bitcoin treasuries, that are also implementing their own strategy, and that strategy is following them now in some sense. So there's going to be probably learnings on different fronts. And an additional thing that I wanted to mention as well with these cash dividends is, because obviously when you start thinking logically and mathematically, especially as Bitcoin maxis, you think, oh, it's actually probably better that they buy Bitcoin with the actual cash that they raised, because just mathematically, you know that Bitcoin is going to probably increase in value and the US dollar will decrease. However, from a narrative perspective, I think that's very strong, because obviously, again, if you look at all the normies out there, they're probably looking at this from a different angle. And I think now they're suddenly see, oh, there's 1.4 billion in cash within this company and they can pay the dividends. So there's a whole narrative behind that just reinforces this. And as you mentioned, through that, it also gives them the comfort to buy those preferreds. So it's again reflexive. Although you might think, oh, it's 1.4 billion that is sitting there, that is maybe melting ice cube as well. But it's not seen like that by everybody, I think. And that's very important to also think about. So absolutely great move on various fronts at the end of the day.
Yeah, I think definitely the right move for the company. If I had to play devil's advocate, I think what it is showing, however, is that Michael Saylor is moving away from his extreme position on Bitcoin and some of the messaging that he's had over the last few years with you never sell your Bitcoin. Now we have in strategies presentation that if they're below 1 MNAV, one possibility is that they would sell their Bitcoin. And just that cash is trash, or that you should put everything you have and more into Bitcoin is he's a bit diluting this message with this. I think it's the right prudent move to do for a publicly traded company, a big company like that. I mean, they have responsibilities to their shareholders, so it's the right move. But I have a feeling it's a bit softening his message. What are your thoughts on that?
I also thought of that, especially there was this interview with on what Bitcoin did with Fong Li, where he for the first time mentioned that they would be willing to sell their Bitcoin. And I think he did it in a good way, because obviously he did mention that there are other ways that they would defend the MNAV before selling the Bitcoin. They highlight the fact that selling their Bitcoin is the last resort move, right? There are other things that they would do before that. And for example, one of the things that they mention a lot is the Bitcoin derivatives, right? How they would probably use those in order to fund the dividends in case they're under one MNAV or to defend the one MNAV. So I think this is an interesting approach. And again, going back to the narrative, if you start selling your Bitcoin, then the whole narrative is also not only diluted, but you lose the whole story of that. So I think, selling the Bitcoin is definitely last resort. I think overall, I think it makes sense again from a mathematical perspective or a logical perspective, but the narrative would just fall apart.
Yeah, and on the Bitcoin derivatives, I wonder if this cash reserve opens them up to new possibilities. They didn't talk about it specifically, but we could think about a strategy close to what MetaPlanet is doing with their cash secured puts or covered calls. This opens up new avenues for them as well, right? Since they do sit on a quite significant amount of cash. They could also try to add additional revenues with option strategies here.
Yeah, that could be for sure something to explore. As of right now, based on the information we have, I don't think that's their purpose, but could be an interesting avenue as well, as you mentioned, to generate additional yield.
And I liked one slide specifically that they shared in their presentation here today that we can bring up here with percentages of Bitcoin growth or decreases that would get them into trouble, or what it exactly means, right? And it puts things in perspective and shows how strong actually strategy is. And as a Bitcoiner, if you have a model for Bitcoin or an expectation of Bitcoin growth over the next 5, 10 to 20 years, you can really plug in those numbers here and see what this means for strategy, right? And I think it's nice to see that they're basically saying that if Bitcoin grows at 1.4% per year on average, they're just in cruise speed, which means they're able to pay their dividends. They're not making money, but they're also not losing money on it. So 1.4% is all they need Bitcoin to grow on average over the next 10 years to be just flat. Then if Bitcoin grows over 10.3%, they call it Bitcoin escape velocity, because then they make more on their Bitcoin than they're paying out on in dividend liabilities, right? So anything over 10% Bitcoin growth, the company is in escape velocity. And then a problem it would become if Bitcoin goes down 19% a year over the next 10 years. So every year, 19% down, no more growth, and Bitcoin going down all the way to $10,000. So if that's your forecast for Bitcoin, then probably strategy is not a good idea. In any growth scenarios, however, it looks really promising.
Yeah, I think the slide really puts things into perspective. Moving to the other news of the day for strategy, so they also changed or revised their Bitcoin KPIs. So they lowered their expectations for the year. They initially had some Bitcoin price prediction by the end of the year of 150,000. So they revised that to 85,000 to 110,000 by the end of the year. They also revised down their Bitcoin yield from 30% to 22 to 26%. And they also revised down their Bitcoin gain from 20 billion to 8.4 billion to 12.8 billion. I think it's a prudent move considering the market and the price action of Bitcoin. And still, I think relatively good numbers overall. So let's see what the next month brings us. The last piece of news that we have here is that STRC dividend got increased to 10.75%. So they increased by 0.25% the dividend. And looks like the STRC as of right now is looking stable, considering the rest of the market is plunging with Bitcoin. So probably a good move here.
Yeah, it shows that they're really acting reliably under their strategy with the STRC, because they had to increase it because it was below 99, right? So they did execute on that. So now we're close to 11% dividends on STRC for a par value of 100. So getting more and more attractive for fixed income. Just one comment on the revised numbers from their earnings. So if you look at it, in a year that, let's say, Bitcoin stays where it is currently, or potentially even goes down a bit further until the end of the year, it's still quite a successful year for strategy. They were able to accumulate a lot of Bitcoin. Of course, their share price is down significantly, but the Bitcoin yield and in general their Bitcoin accumulation is still going on. And this is an interesting thing to look at. Is if we end the year here, it will have been a bear market year. I mean, we're lower at the end of the year than the beginning of the year, but through the fluctuations throughout the year, there were still periods where strategy was able to raise a lot of money and buy a lot of Bitcoin with it. So
Yeah, no, that's an excellent point, because that just shows how the volatility from Bitcoin just allows strategy to accumulate further Bitcoin. Even if Bitcoin at the end of the year stays flat, they would have had their best year yet. So, and that's all due to the volatility at the end of the day.
and it's not like, it's not a good year as an MSTR shareholder because you lost money because the share went down. But I think it will have been a good year in retrospect if you look back in a few years and see how much Bitcoin they were able to accumulate. Because I think you need to have the long-term vision of this company in mind, and the more Bitcoin they're able to accumulate, the better off they will be at the end. And I think that's the important thing to take away here.
I would argue that as a shareholder, from a Bitcoin lens, you're fine. From a fiat lens, you're not. You need to make the distinction there, right? Because Bitcoin per share increased quite a lot. Obviously, the share price in USD terms did not. So yeah, that's maybe the distinction that you need to have. Yeah, I think that's actually a good place to wrap it up. So thanks for listening. See you on the next one.
Bye-bye, everybody. See you next time.
How many chairs are you sitting on right now?